Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Somani Home Innovation, which can be a wealth creator over the next 3-4 years. So let's understand about the business. Let's get started. First of all, disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Samani Home, here's a small request that kindly support me on Patreon. Once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And also, if you can pay $100 upfront, you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out with a fee. And also, if you cannot pay on Patreon, kindly do email me because there are other ways of paying and taking other memberships as well. Now about the company, it's a newly created entity of HSIL, and it provides a number of home improvement products, and they are innovative products which are smart products. Their products include kitchen assemblers, chimneys, dishwashers, air coolers, water and air purifiers, refrigerators, etc. And all products are covered with IoT and state-of-the-art technology. So you can probably access these products through your mobile phones, and this is the kind of technology that is inbuilt into these products. The market cap of the company is around 23-2400 crores, and it's coming at a very reasonable level because its sales is around 2200 crores as well. And its name has just recently been changed to Hindware Home Innovation because Hindware is its biggest brand and one of the biggest brands in this segment that it produces the products for. Now about the financials, so these are the Q4 numbers. The sales went up by 12%, so it was a decent quarter because normally sales and profitability did not go together for most of the consumer companies, but here sales went up by 12% and profit went up, albeit through lower taxes and other, you can say, income, but profit did go up by around 68% to around 37 crores versus 22 crores. There's decent promoter and small institutional holding in there. Yes, FIIs have sold into the stock just recently and some DIIs have also done that, but the stock has also fallen a lot from the top. It has gone down something like 50% from the top. The return on equity is close to 28%. Margins have dipped to 9% from around 12%. So that is what I wanted to state here, is that the numbers are good on the bottom line only because of other income and lower taxes. Otherwise the margins have dipped, and profitability has, in terms of operational profitability, it has come out just about better than last year. Very low debt, so it's a debt free kind of a company. So what has been ailing the industry altogether? Global economic slump because most of its products are exported. There are 80 countries where SHIL exports its products, and with the kind of economic slump because of the pandemic that has taken place, that has given a lot of hit to consumer companies who export to other places. Higher raw material cost, you see a lot of problems happening with auto companies with chip shortages and higher cost, and higher cost is ailing all industries because the oil and crude prices across the globe have gone up, and that is percolating down to all raw material cost getting escalated. And current situation has worsened the issue in a scenario where everything has got expensive. Higher inflationary pressures globally has reduced, you can say, purchasing power of people globally, and what has happened is consumerism has been hit badly. A decline in construction activity since the last 2 years, especially here in India, over the last, in fact, 4 or 5 years. So what happened was from 2019, 18, 19, things looked upwards, but over the last 3 years, between 2020 Feb March till now, probably 2.5 years, things have really looked down in terms of construction activities. Although real estate companies are getting the projects and projects are getting started, but the completion of those projects are taking a lot of time. And remember what the kind of products that SHIL produces, it requires the buildings to be completed, and then you would say the furnishing is done, and then these products are bought into. So that is where the problem lies at the moment for companies like Somani Home or Hindware Home at the moment. It had left lofty valuations earlier. Now it is trading at very reasonable valuations at one-time sales. It did go up, so it went up. So currently it is down something like 50 to 60% from those high. And mid-cap sell-off has also not helped. So we have seen from October onwards how things have panned out, the way mid and small cap has been butchered to pulp from those levels. So around 7 months of selling has taken place, and SHIL has also gone down appreciably because of that. In terms of the salient features of the company, it is producing next gen consumer applications with inbuilt technology. As I said, AI technology is inbuilt into it, IoT, Internet of Things is being used. Having a number of products in various segments is also a big thing, because now they are able to cater to a number of, you can say, consumer experiences. A virtually debt free company and low market cap for such a business that is going doing sales of close to 2200 crores, is trading at 20 to 2300 crores market cap. It's coming at one time sales, which is pretty good. Reasonable valuations currently, as I said, trading at one time sales, and looking to grow at 30-40% CAGR for next few years. So that is the basic point. Although the next couple of quarters could be difficult, but over the next 4 years it could grow at 30% CAGR on the bottom and top line, and that is where the growth is going to come out, and that is where the stock looks extremely attractive at these levels. The Q3 and Q4 numbers have been pretty good. Q3 numbers were very strong. Q4 numbers have been pretty good considering the kind of environment we are in. And we are having an expectation of better numbers as things open up completely. And that is exactly what is happening. Things are opening up across India, across the globe. So I think numbers should look better, especially for this festive season from October to March. Numbers should look much better. So, in terms of expectation, I believe that if management delivers on performance and we have a 27% say CAGR profit growth over the next 3 years, then yearly EPS for FY25 or 2025 EPS could be close to 55 rupees. Currently, it is trading at only about 12 times earnings, whatever the EPS is coming out, 20 to 23 rupees. I think it's going to more than double over the next 3 years with the kind of things that the company is doing. And industry PE is between 40 to 60. So even if we take, say, it trades at 40 times earnings, we can see 2200 on the stock. And based on FY22, it has yearly sales of 2200 crores. So basically it has done 2200 crores. The stock is trading at 2300 crores, very interestingly poised. And normally consumer companies trade at 3 to 6 times earnings. So I think relatively it should at least be, I mean, FY25 sales should at least be 4000 crores, and the stock should be trading at around 14,000 crore market cap. So a lot of momentum is possible, and the stock could trade between 2000 to 2200 over the next 3 years. It could be very big over this period if the company really delivers. Some threats in terms of the growth that we see in the market is that heavy competition from other large players. So there is a lot of competition that is coming through from other, you can say, players, especially you can say unorganized market. Even organized players which are large in domain are putting a threat, because now because of higher competition the margins will get reduced. So that is one of the fears. It has been a late entrant into this domain in 2015, and a lot of companies have got in there. A lot of brands, established brands, have got into the marketplace with such kind of products. So as I mentioned, there has been a lot of competition with a lot of players that have gone into the market. Plus, economy do not open completely. That is also a fear. We have seen that The pandemic has again, you can say, raised its head in China, and we have seen complete lockdown in many places in China, and in some places in Taiwan, etc. So these things could again crop up and hamper growth going forward in the next 3 years. I think lower market cap will attract less HNIs. That is also a concern. Less mutual funds would like to get in there. Probably when the market cap goes closer to 10,000 crores, more you can say mutual funds, HNIs, etc., fund houses will get in. That is also a concern, that the stock may not move even with the numbers kicking in. And small cap rally, if it fizzles out, suppose there is a rally and a very shallow rally, and because of low liquidity, because of the cash crunch, because of, you can say, tightening from the Fed, there could be a lot of issues with the small cap and mid cap companies. So in that regard, the valuations could remain cheap for a longer period of time, and the stock may not move. So these are some of the threats. Plus high raw material costs. We have seen that the oil prices have gone to 124 $125 per barrel. I'm talking of Brent. So if this continues, this will have a direct impact on the ceramic business of Somani Home, on the home improvement business of Somani Home, Hindware, etc. So these are probably a potential threats that are looming for the company, although currently the valuations look extremely attractive. If these threats are thwarted off, things should look good for the company. In terms of technicals, it looks strong on charts now. It is now recovering, have fallen a lot from the top. You need to understand that the stock has gone to 470, 480 if I'm not wrong, and then fallen to 300 levels, around 300, 310. There is strong support between the 255, 270 zone. So any dip towards 300 would be a very good buying opportunity, and the major breakout is expected above 360. So around 320, 330 at the moment. If there is an 8-10% decline because of the market fall, I think those will be very good levels to get into the stock. Remember, it is an illiquid stock, so be careful if you trade into it. This is kind of an investment, kind of a bet in which you put 5% of your total portfolio and probably hold it for 4 or 5 years, and let's see, it could really give you strong results, or could really means lose you 70-80%. That kind of a stock may consolidate, as it has moved a lot from the bottom, and it has been very volatile as well. So in terms of movement, I mean, it hasn't, not just one way movement. It has gone up and gone down in the last 1 year, and so it might just consolidate and may not move a lot. So in my opinion, buy only if you have a 4 or 5 year time frame. So I have given a target between 2 to 3 years, but let's have a time frame of 4 years if you really want to buy into it. If you have the stock, then probably if you want to buy more, wait for declines or consolidation to buy. Around 300 could be a good level to get into the stock. It's a good company if economy improves over time. So basically, economy has to really perform well for these kind of companies to do well, and in earnest, global economy needs to perform extremely well for the stock to do well. Only take small position at these levels and probably buy more as things improve on the numbers front, and has have less than 5% exposure into such stocks. So this was a video on Somani Home, which is now Hindware Home. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.